Good morning, everybody. Trust your evening went well. I upgraded. I put Rich's 20 period exponential moving average on the screen, so I will be sure to get his signals right as I understand them. Today is FOMC day, announcement day. That usually stops the market, keeps it on hold. Stock market was strong overnight. Probably will be trading sideways until the Fed speaks their piece. We've got the 5-year auction today, which should yield higher prices than yesterday's if this auction follows the recent patterns. Historically, the auction, the short end, the 2-year has been up, the 5-year has been down, and the 7-year will be up to make sure that the paper is moved. We'll just have to see how that plays out today. No news today other than the FOMC announcement, which can really impact the markets, just like unemployment. So crude inventories plus 3.3 and FOMC. Okay, we have a low volume number at 23, so we're going to try to buy cheaper this morning, 21 to 25 because of the V pattern in the overnight, and then 17 to 13 for buy 2. Taking advantage of this high volume number, the attractor down here at 14. Volume is lower than yesterday's volume and is lower than the volume prior. Yesterday's play was in puts. So there's structurally and underneath the surface, this market's trying to trade a little bit lower. I put an article up on the FOMC outcome today, and they're looking for the taper to continue, no more out. QE3 comes to an end, but interest rates low for a long time, and comments to the effect that the Fed will do any and everything to support the economy, etc. Structurally, the first sell is 31 to 31.03, then 7 to 11, pretty much where we were yesterday. And so we're going to anticipate trading range market with an early lower bias, but coming back into the rallying into the 5-year auction. Yesterday's auction took place at 31.5. So that's the way I see it for the note. The information y'all had last night was sell failure to take out 27 even, 27.04, and the high was 27.5. So you were able to pick up a little bit. Not the world's biggest trade, but we had the direction right. And our buy was in the 25 to 29, and so far the low is 26.5. So pretty quiet, all things considered, but that's pretty normal for pre-FOMC trading. Looking at the 30-year, same pattern. Volume is moving lower. Had volume back over here, volume right here. Definitely a B pattern. So a little bit lower, 5 to 9 on the buy. 1 to 29 for buy 2. On the sell side, 19 to 23. And we get some help out of the selling in the knob spread. We should be able to get down into that basically support at 141 even, 141.04. Playing for a little cheaper this morning. Hopefully we'll get it. Gold was extremely quiet last night. Poor Eric is probably having to make a living as a trader now, not just jumping on to a very, very volatile, explosive market and enjoying the ride for as long as he can stand it. Not saying it's arrived at the level of the 10-year note, but you can see right here, not a heck of a lot to work with. We're at 25.27, which was our first buy zone last night. I'm going to leave it the same. I just don't see that there's a heck of a lot has changed. I think this market will be on hold until the Fed speaks. And 20 plus or minus for buy 2. At this low volume number right down here at 21. I also have a low volume number right here at 26. So this area should be pretty good support. We left yesterday wanting to sell 30 to 32. The high was 30. We'll just leave it the same. I don't see any reason to change anything. 35 to 37. As I expect this market to be on hold until the Fed speaks. The FOMC announcement cut final, no QE4. QE3 ending is actually supportive for gold. Means we are printing less money. Inflation does not seem to be a problem much of any place in the world once you get past food and energy and services. Everybody seems to be taking advantage and raising prices right now while they can in this window between the elections. A lot of people don't understand how prices can go up in front of elections. Number one, the eye of the federal government is off of them. Everybody's focused on keeping the current administration in power. Also, the administration doesn't want to roil any feathers, rough anybody up, and they want to get as much money out of these people as they can. The large companies know how to play this game. They figure that they'll be able to negotiate their way out of it, worst case, and that's why they do it. If a new change is coming in any federal law that's applicable to the United States, they raise prices. So get it while they can, because price controls may not be far behind. 50 to 60, sell 1. Make it 75 plus or minus, sell 2. I think this market is on hold. QE3 ending. Interest rates the same. Should pressure the euro a little bit. We'll make 20. We'll make it 15 to 25. It's a little heavy. Buy 1. And 27 even plus or minus for buy 2. But look for pretty quiet trading in the euro too. Everything's on hold because of the FOMC, which is a huge piece of news and information. When the ECB speaks, the euro can move sometimes $1,000, damn near instantly too. Okay, looking at crude, we talked about 80 as 79.50 to 80 is support right now. And best resistance was in that 82.50, 83 area. So here we are at that potential resistance level. Got 83 over here. We've got resistance at 82.35. So we're going to make 82.50 on the assumption we can get stops. 75, sell 1. 83, 83 and a quarter, sell 2. On the buy side, running it up into the EIA number, short covering in front of that, probably 81 and a quarter, 81.50 is about as best we can hope to buy it. Really prefer the short side in crude because of the economics, and then 75 to 81 for buy 2. So a little bit higher this morning, then down to the EIA number, that's if it comes in as forecast at plus 3.3 million barrels, that's a negative number. And last but not least, the E-mini. You know, yesterday we came in as buyers. Why? Because the market tends to rally into every FOMC meeting, especially since March of 2009. It tends to continue to rally after the announcement has been made. And last night we left as buyers in the 75 area, and then again at 70, 72. So this market makes us pay up to get in early. I mean, there's no way to get around it. So buy one is the 75 area plus or minus. I definitely would like to get it done lower than 70, 72 for buy two. The Fed's not going to do anything to upset the stock market apple cart. It's the one bright thing that they can point to, and it's the easiest to manipulate. They have not been able to create jobs or lower interest rates. They've not been able to bring commercial real estate back. They have been able to point to success in the 4 real estate markets that were the most, that really collapsed 50%, some of them, or more, but they haven't been able to bring back the type of inflation for real estate around the rest of the United States. So, but they have been able to keep the stock market high, and they know how to do that, and they're going to continue to do that. So, might get a little flush on the FOMC announcement, but I would imagine that it will come back shortly thereafter. So, once again, due to the tendencies into the FOMC meetings, we like the long side of the market. Okay, it'll take about 20 minutes to get everything up and done. I'm going to get busy on that. Really no news at all to speak of this morning. We have the EIA inventory report at 10:30 Eastern. And that's for the news. So right now we're looking at pretty good buying in the 26, 27 area. I'm hoping to buy 25s a little cheaper. May not be able to get it done. Be back with you as soon as possible.